Welcome, everyone, to How Digital Banks and Fintechs Can Successfully Navigate Regulations, Risk, and Uncertainty. I'm Ed Delheim. I'm a member of NYPAY's Executive Committee and co-host for this evening. We're really excited you chose to be here. Thank you wherever you are located, and especially if you're under a fan right now, trying to stay cool. And thank you also for those that were able to attend last month's conversation. We had a lively conversation around instant payments from the front lines, and you'll see a link to that if you happen to miss it for whatever reason in the chat. You'll be able to go back and review that, just like you can review all the different events that we've hosted over several years, going back nearly a decade. We'll get started in just a minute, but also want to preview next month's call. We will be focusing on stablecoins, very timely, and looking forward to that. Coming soon to an announcement near you with the exact details and date on that later in July as we do our monthly series here. And as you can tell, NYPAY is a member organization dedicated to holding informative topical discussions based on an annual survey we conduct to determine which topics matter most for our members. And tonight's topic certainly was one of the most important ones that we were told to make sure to focus on. We want to make sure also to thank our sponsors for this evening, Lithic. They're a provider of payments infrastructure that just works. And so quick housekeeping, then I'll move on. Our facilitator tonight is Ron Shevlin. He's the Managing Director and Chief Research Officer with Cornerstone Advisors. He'll be introducing to you our panelists just momentarily. And just to frame up the agenda, he'll be conducting a 50-minute discussion, followed by 15 minutes or so of Q&A. We'd encourage everyone to send in their questions via the chat function, and we'll cover as many of those as we can at the tail end of our hour. After the Q&A, everyone's welcome to stay for an additional 30 minutes for networking. We'll divide folks into smaller groups to go into breakout rooms, introduce each other, have a good discussion, try to do a couple rounds given timing of that. Two last things. Please do take yourselves off of camera and be on mute so that all of our attention can focus on our panelists and their insights. And for those who are wishing to connect with fellow participants, feel free to add your contact information to the chat as well, an email or your LinkedIn URL, whatever works best for you. And with that, Ron Shevlin, please take it away.
Thanks, Ed. Thank you, NYPAY, for putting this all together. Appreciate this opportunity to participate in all of this. Not the first time I've done something with NYPAY, but it does feel like it's been a while. So thanks for having me back. And thanks, everybody, for joining. I do want to just not correct Ed, but just build on some of his comments and say, listen, I've got the chat window open. So if there's a comment or a chat, I think some of the best meetings are the ones where the side chat has all the good stuff that's going on in there. So I'll try my best to kind of monitor it. And especially if you do have a question you want to get in there, I don't think there's any reason why we need to wait till the end. I think instead of me trying to introduce the panelists, I'll just ask them to give a brief background of who they are and the companies they work for. Carol, do you mind starting off? And don't forget to take yourself off of mute, Sean and Han too.
Sure. Hi, Carol Grunberg. I'm the Chief Business Officer of UNO. We do payment orchestration globally in about 200 countries. Previously, I was at Google, Citi, and Alipay, so I've really been steeped in payments and tech my entire career. I'm really looking forward to this panel.
Shawnette?
Absolutely. I am Shawnette Hendricks. I'm currently the head of compliance at Lithic. I've been with Lithic for about 4 years. Prior to that, was with Bancorp Bank for over a decade, and before that, Wells Fargo Bank.
Great. And Han?
Sure thing. My name is Ahan. I'm the SVP and General Manager of Helix, which is a cloud native core and banking as a service platform at Q2. I helped start that business, I don't know, back in 2017, so I've been doing that for a while. Prior to that, I worked at a hedge fund called Bridgewater, and prior to that, a handful of entrepreneurial experiences. So it's nice to see you all.
Great. So I really can't begin to wonder why you were NYPAY and all you folks were scraping the bottom of the barrel for topics around regulations, risk, and political uncertainty like there's anything going on in the politics and regulations. So kind of surprised. No, I'm just joking, of course. But Shauna, I'm going to get started and let you kind of weigh in first here. And As you look at the environment right now, I think it's been a couple of years that the fintechs in general have kind of gotten a religion around compliance and recognize things. But further on down the line now, as you kind of look out into the fintech and digital banking world, what do you see as some of the smart things that fintechs are doing around regulatory and compliance programs?
That's a great question. It is a moving target, that is for sure. And I feel like we're all chasing it every day. I guess for us, one of the biggest facilitators of us being able to keep on top of things is really the partnerships that we have with our sponsor bank as a program manager. We've also got multiple relationships with other banks as processor only when we're just the issuer processor. But really just staying tapped in with those folks and having those close working relationships with their legal and compliance teams has really made a huge difference, right? It takes a village, as they say. So really tapping into those resources to make sure that you're all trying to stay abreast of what's changing in the environment. On top of that, we've got some really great folks, like hiring the right people within your organization that come with some of the background knowledge, have kind of been on the front lines, so to speak, and have seen the things. We all say we know a thing or two because we've seen a thing or two. It's very true. So tapping into those resources externally and internally has made a huge difference for us. And then, of course, being fintech, we've got a slew of employees that are constantly watching different industry changes in regulations, information sharing constantly. We've got multiple channels dedicated to that 100% of just information sharing. And that has been huge, just the collective working together to stay on top of things.
So from a risk and compliance perspective, what types of roles and functions does your organization have now that you didn't have, say, 2 to 3 years from 2 to 3 years ago? And where are you finding these people?
Another great question. So 2 to 3 years ago, our compliance team, just focusing on that first, was very lean. It was 3 to 4 people. We quickly learned that we can get a lot done with 3 to 4 people, but the way that we were scaling, we had a lot of manual processes that we either needed to automate or find more people to do the work. And so we found some really great talent that came from other industries, including some out of the Philippines that worked previously at like places Capital One. We've got other folks from different community banks that are now on our team, folks from the Bancorp Bank that came over following me, which was great because I already knew their talents and how they could apply to what we're doing today. But I will say, and this is going to seem a little crazy maybe for some folks that are in the compliance world, maybe not, but the recent hires that we've made for product managers that have already worked in the space, again, have seen the things that happen, have been tapped into what needs to be built in order to be compliant with the different regulations. Whether it's like we're looking at building a credit product and your product manager already knows, all right, well, I understand that X, Y, and Z regulations are going to apply here. So I need to keep those things in mind as I'm baking out this product and working with engineering. Huge, huge.
Was it a challenge to kind of build the team up over the past couple of years, or how did that kind of play out from an organizational perspective?
I think sometimes finding the right people is a challenge. We were pretty fortunate and we had quite a bit of interest when we posted our open spots. So I think the biggest challenge, at least for me, as being part of that interview process, was finding the person that was the right fit for the culture, right? There's a lot of great talent out there. We just really needed to find those people that fit in with the folks that already work here. And fintech's fast moving, right? When you've got a lot of folks that come from the banking environment where they're used to the very rigid controls and things that are in place, and everything takes a long time usually to get moving. Fintech is much quicker. And so just keeping pace and being ready for the challenge of things that are going to change on a day-to-day and being able to pivot, I think was the biggest hurdle in finding that right person. But overall, we've had really great luck and we've got some really talented folks on our teams.
Great. Carol, I want to get you into the conversation too here. I think as a lot of fintechs in particular build out their risk and compliance functions, even though they might be hiring experienced people, they often kind of don't have an organizational framework or construct. So talk a little bit about risk management frameworks or approaches that you've seen work or that you think that fintechs should be deploying and using.
Sure. Well, if you think about it, fintechs really exist in large part to make transactions a lot more convenient in many ways for the end merchants. And so part of it is what I've observed being in fintechs or working with fintechs is the ability for fintechs to also wear kind of a product solutioning hat. And so one of the things that I've seen is for having the importance of having local teams. So understanding local regulations and having centralized risk or compliance platforms really in place across these fintechs, but also for them to know what's happening. For example, India has certain things that you can't charge MDR, for example, on UPI. And so there's implications there for merchants and for gateways. And so from a product perspective, you need to be able to help in merchants to be able to consume, to have some of these merchants be able to consume these products, but at the same time, understanding what fee structure needs to be in place. So what I've noticed is really good fintechs have a lot of local expertise, centralized frameworks, and then also kind of understand the strategic objectives of their merchants to be able to provide inputs as to how they could augment what they're offering in each local region.
What tools do you recommend or do you use yourself?
Yeah, so we've got central databases that we use, and then we do real-time kind of access to real-time monitoring of any regulatory changes that happen. And so to make sure that if anything, let's say changes to the prohibited goods list, for example, we're aware of it. But we just really plug into a lot of external available resources, and we centralize all that.
Great. Ahan, want to get you into this as well. And I know you'll come a little bit more maybe from the tech stack perspective. What do you see as some of the compelling requirements from a tech stack perspective, and what's changing out there from that perspective?
Yeah, I think it's a very different story whether you are a fintech who's trying to build banking as a service products, or if you are a bank or credit union who's trying to kind of evolve their digital banking or banking strategy broadly. I'd say if you're a fintech, I mean, if we go back in time, right? 2016, 2017-ish, BaaS starts to pop up as a phrase. You have folks like ourselves and Green Dot and Galileo and Marqeta and whatnot that kind of enter the space with that terminology. And between, I don't know, 2017 and 2020, it pretty quickly became very ambiguous what was under the hood of the term banking as a service because there were 20 different ways of skinning that cat. Now, the dirty little secret for a while, though, was that a lot of those folks, ultimately, what the product came down to was building a middleware layer on top of whatever was sitting at the bank, opening an FBO account, hanging a prepaid card off of it, and praying for the best, right? And the truth was, between 2020 and 2023, it was like a race to the bottom with middleware providers, right? Where it was how many people can you sign and how streamlined can you get the setup, which meant how standard could you get the setup. And then come 2024, suddenly you see substantial regulatory scrutiny as the multi-party like banks or regulators want you to have discrete contracts. You see scrutiny on the middleware model and the FBO and prepaid model because it was kind of extending FBOs and prepaid beyond what they were supposed to do. And so suddenly you had this whole crop of fintechs who had built banking as a service saying, gosh, maybe I need to be closer to the metal, right? And, in Helix's case, we took the granted difficult path of building the core from scratch. Lithic took the path on the processor side. But what I think fintechs are starting to realize is I can't be intermediated by a middleware. Like I need direct access to the actual technology because otherwise you're just painting the car a different color. Right. And so what we've seen between, call it beginning of 24 and mid 25 is a sudden push from folks who built on middleware to want to get to core technology or direct processor level technology because you're no longer just taking the same batch processes and then delivering an intermediary. You're now actually accessing real innovation. So that's what I'd say is happening on the BaaS side, basically a move from middleware to core and direct processor integrations. On the banking side, obviously the two big players in the room are your digital banking provider and your core provider. And I think we've been hearing people talk about core modernization for a decade, right? And I think we can pretty fairly say it has not yet happened, right? It is happening in these little components, but you don't see the majority of banks on modern cores. With that said, I would say in the last, again, 18 months, we have found a few things have changed. Rate environments changed, deposits are way more expensive. Competition has changed, and the capabilities under that competition has changed. So now, I mean, Chime just IPO'd, you're looking at the crop of fintechs, but you're also looking at banks starting to bring AI, et cetera, into the fold. And so that's changing digital competition. And I think it was Cornerstone actually that put out the report that half of onboarding is happening in these digital only type institutions. And they're losing customers as a result. And so now banks and credit unions are feeling a pressure they maybe haven't felt, and starting to say, how do I differentiate? How do I be competitive? And how do I maybe look at core modernization as a incremental journey as opposed to open heart surgery? And so we're starting to see again a renewed interest in exploring kind of progressive core modernization in which you hollow out the core one piece at a time. And so I think the common thread between the two is a desire to get closer to a modern core stack, modern technology, and get closer to the metal to actually drive innovation that creates differentiation and prevents consolidation down the line.
Thanks. Sean, I'm going to go back to you because I'd like you to talk a little bit about the regulatory environment. And, obviously part of the whole focus of this has been around political uncertainty. Where do you see things going over the next couple of years? How will you be responding to it?
Good question. So I think when we think about changes in the regulatory environment, whether it's political uncertainty or otherwise, even just like the changes of any regime, there's always kind of a baseline, right? So we think about the regulatory environment kind of doing this number. There's like peaks and valleys, and the urge right away when we feel things loosening, at least in an environment where we're driven for sales, right? We want to grow, we're trying to get big. There's a huge desire from a lot of companies to like, all right, well, the bar has been lowered, so let's follow the bar down. We can finally loosen the strings. But I think the more practical approach to this is like the farther away you move from the arc of the band, the farther you're going to have to pivot when things eventually and inevitably change once again. So the approach that my team takes generally is, okay, we need to find where we are in the happy middle. Like, where is the risk that we can logically take so that as we go through this bell curve, when things inevitably pivot once again, how do we get back into that happy median without having to go from one extreme to another? So it's really just really knowing your products, understanding what's changing in the environment and how your product is indirectly or directly implicated by those changes, and keeping your arms wrapped around it, and then working with the other stakeholders within your company to make sure that everyone understands that any move that you make is going to be risky, but you want to be kind of in the middle of the road so that you can react quickly without having to make like egregious changes to your compliance program to do so, essentially.
Yeah. Carol, do you want to comment on the same thing and maybe talk a little bit about best practices and adapting to local regulatory changes too?
Yeah. Let me give an example. And actually, I'm going to use another international example. A lot of my focus is on that. I remember I was doing a deal a few years ago with in Thailand, working with Uber and working with the largest wallet in Thailand is one that's called True Money. And one of the things that they needed to do was, in order for Uber to be able to accept True Money as a form of payment on their platform, was obviously work with regulators to be able to bring that to life. But at the time, there weren't any wallets locally that were doing cross-border transactions. And so we needed to spend a lot of time with BOT, which is the regulatory body in Thailand, to really explain the business. As a fintech, we were in the middle. We had to explain from a regulatory perspective how the money would move, how it would be monitored, how much money would stay in country, and then how much would be dispersed and go abroad. And also they put some stipulations as to whether stored value balances could be used versus credit card or direct pulls from bank account when using an APM. So that was really interesting because there were several layers. It was uncharted territory. The regulators weren't sure what to do with it, but it was a new kind of line of business entering the country. But we had to spend a lot of time locally working with them, working through the business model. But had we not had local expertise and working through the product solution with the regulators, it would have made it really challenging to be able to bring that to life.
David put a question out there I think would be good to address. If a U.S. firm is expanding internationally, can they outsource compliance?
So that's an interesting one. I don't know of companies that do compliance as a service, so to speak. But generally, what I've seen for a lot of international companies is that they have a lot of local tie-ups. So they will partner with someone in India or someone in Indonesia, for example, to be able to have that local expertise. But a lot of fintechs do provide that they need to. But again, I don't know of, actually, this would be an interesting one, right? For a company to do compliance as a service, local compliance as a service.
Yeah. Han, do you want to weigh in on that one too? And then I got something else I want to follow up with you on. But it seems to me that you were kind of dismissing the BaaS middleware space because of the direct connection, but it always seems to me that there's a big hole, that it's not, that the middleware layer was not about disintermediating the bank from the fintech, but providing a better integration connection. So does this impact the compliance and risk management worlds and offer an opportunity there?
Yeah, I'll start with the premise of the question, which is, why did middleware pop up, right? To your point, traditional cores did not have a real-time API that you as a fintech could interact with to issue accounts, to create cards, all that kind of stuff. And I mean, you actually trace Helix's story back to Smarty Pig back in 2012. The problem they had is, gosh, I need to go launch saving products. And they go to someone like BBVA and they're like, hey, the cost structure of my traditional core and the API friendliness of my traditional core are such that I cannot execute that product unless you go build a core. So we took the path of, okay, we'll rebuild the core. What middleware did is said, well, hold on, do we need to open a real account for the customer, or do we need to open one big account on the core, pay for that account, and then keep a sub ledger somewhere else, and then basically connect in all the third parties so we can deliver the functionality that the traditional core cannot deliver without having to redo the traditional core? And so, to your point, for the fintech, I get a real-time API where I can create what I believe are accounts and I can issue cards, etc. And that worked fine from 2017 to call it 2022, particularly if you weren't scaling very large. But then to tie to the second part of your question, okay, well, what were the risk and compliance implications of that middleware architecture? At the most fundamental level, it meant that the bank is running a core, and from their perspective, they have one account. The infrastructure provider on the BaaS side is running a subledger, and from their perspective, they have millions of accounts. And these two parties communicate by exchanging batch files every day. They say, hey, these are the accounts, these are the transactions, etc. And when that goes wrong, you have a situation like what happened with Synapse and Evolve, right? Where this subledger is saying that you have $96 million more than this subledger. Now, there is some basic hygiene when it comes to daily reconciliation, oversight of KYC, oversight of BSA AML, a standardized set of fraud practices, a deep dive into what's going on the actual user interface, etc. That were just not happening, and it's good for the industry that type of event is forcing that type of scrutiny, because it's really critically important that as a bank, if you were going to extend your charter to someone else, you know how many people are there, you know how much money they have. It's not an ambiguous question how much money was in the underlying account. But to your point, cat's out of the bag. There are tens of millions of users that are sitting on infrastructure that is middleware. And so then now you have this problem. You're like, okay, the bank's running a core and it can see one account. The fintech is running a subledger the fintech is working with other fintechs and running a subledger. And so there are two different sources of truth. So now what's happening is a lot of those parties are trying to build some kind of back office console where the bank can go access what is happening on the middleware and vice versa, to try and enable the type of compliance, oversight, risk management, et cetera, that are absolutely necessary. The challenge is that takes time. It takes a long time to go build that stuff out really well. And all of the majority of these fintechs are privately funded, right? And so they have a certain amount of runway in which they have to build that, scale the operational functions, and then get it humming well. And so it's interesting because we at Helix, we took the slower path. Like we decided we're going to rebuild the core. We're going to build a real-time admin console that connects everyone day one. But what that means now is, even though it took us longer to launch some features, now all of it operates with real-time visibility at the bank, where you can see these are all my accounts. These are the real-time balances. These are the transactions that are happening. This is how my fraud protocols are triggering, so on and so forth. And I think the question for the middlewares are they going to be able to build that functionality out fast enough? And then separately, are there going to be third parties that come in and say, I will sit between you two. I will be the middleware between the middleware and the bank, and I will provide that visibility. And we're already seeing that in the space. So a lot to be shaken out there, but ultimately they're trying to solve the fundamental problem that is a function of the architecture that got them to market in the first place.
Middleware for middleware. Can we call that meta middleware? Forget
If
it. If
you
I
can say
can't
it five
say it, we're
times
not
fast, we can
calling it
call it
that.
that.
Yeah, we'll have to come up with a name for that. So, Carol, I think fundamentally what Han is really alluding to when he talks about these middleware and integration capabilities, it's all about the data and having access to the data. Can you talk a little bit about how fintechs can leverage real-time data and analytics to stay on top of emerging risks and liquidity issues?
Yeah. Yeah, so I have, I'll give a couple of examples. One from, at Citi and something we did to address this issue. But one of the things that some fintechs have, which is interesting, is they have access to a consumer and they're able to see wherever that consumer spends, right? So for example, a consumer could spend, on an airline, and then they could go and they could spend at a digital marketplace or a gaming merchant. And a lot of these fintechs are starting to hold these tokens. And so irrespective of how the user spends, they have tokenized the user and their forms of payment associated with them. And so if they see any anomalies in spend in one place, they're able to alert the merchant in any changes in spending behavior. So that's one thing that's kind of emerging and kind of being, interesting. And it's somewhat akin to what's happening with network tokens with the credit card networks, where right now the tokens are working across networks, but a lot of the fintechs have started doing this already because they do cross-border transactions and they tie the forms of payment across to the user. So that's one thing that enables interoperability across networks. And I believe we're going to continue to see more and more of this. And so that's one. But another thing is, when I was at Citi, we worked on something called the Regulated Liability Network. And this was actually specifically for this reason, in that it was 8 commercial banks working together and also the New York Federal Reserve, and really it was designed to enable real-time cross-border and interoperable payments using a tokenized form of regulated money, such as bank deposits, central bank money, but in order to be able to manage liquidity across these entities. So this is something that's still being tested and piloted as we speak, but this is one way in which actually leveraging private permission change, some commercial banks are starting to look at, let's scrap the whole thing, let's not upgrade infrastructure, but instead let's see how do we work together on a tokenized permission chain. And so I think we're going to have a couple of these things continue to play out.
Sean, I'd love to hear you see if you can build on that. Or is Lithic looking at on-chain approaches as well?
I think there's been discussion about it, but we're working on a million different things at once, it seems. So I'm not completely tapped into those conversations, but I can echo the part of the fintech piece really needing to be tapped into the overall data, right? Because we've seen that as well. And the bank that's associated. So the separation of church and state that was middleware, it no longer can really exist. And I think every day we're seeing the changes with our issuing banks that, 10 years ago, even just for Lithic, they were okay with just functioning with reporting and things that were handed to them ad hoc. And now the environment has changed. And those of us who came from banks, we're totally supportive. We're like, yes, you should have the data so that not only can you have this and tell your regulators that you have it, you can also self-serve, which is less work for my team.
Okay. I actually want to go back, Shania, to something you had mentioned at the very beginning, when you mentioned that having experienced product managers was helpful from from a compliance perspective. I kind of want you to take maybe the flip side of that, and how have you been able, or how to what extent have you been able to embed compliance into product development and maybe even more broadly the corporate culture altogether?
It's been an interesting shift in, I would say, perspective, especially for a fintech when you're a startup, like 4 years ago. Really bringing people around to understand that these things are important and that your bank is not a vendor, your bank is your partner. And without the bank, that you do not have a product or a company, if that's what you're doing for a living. So we've hired some really great people over the years, like I said, from various different banks that just kind of reinforce that culture. Product managers are great, but just cross the organization, whether it's someone working in the sales team, implementation, marketing reviews, you name it. That expertise, like bringing a few people in that can spread the word and say, these things are important. And let's approach this from every perspective of what we do, whether it's how we sell the product way up top of funnel to how we build it during the middle, and then how we manage that through the life cycle of the actual client journey. It's been huge, and a huge pivot, because once you change your mindset to where compliance isn't really just a burden, because that is we always joke in compliance, like, oh, we're gonna have to put on our no hats today, right? We're gonna go to this meeting, we're all gonna have to say no, and we hate having to say no. It really helps because you get the opportunity to collaborate and find out the places that you can work together to maybe mitigate some risk to make a different type of product viable, where in another case, if you couldn't collaborate like that, it would be put on the no hat and a hard no. So those changes, even just from like the inherent understanding of why these things are important and how they can actually benefit us, has changed the culture completely, which is wonderful. It's much easier to work with our existing banks. We've got lots of banks. Like, we have a constant stream of a pipeline of banks approaching us for either wanting to work with us from a program management perspective, or they've got clients and they're on an existing processor and they want to switch to us so that they can move to our tech stack. And then just coming in knowing that there's already this compliance regime that's there that can act in a PO perspective as an advisory situation, or as program management, knowing that, all right, if we're going to offload these responsibilities to you in some capacity and you're going to be the front line, we can trust you with those responsibilities, and we know that you are going to be forthcoming because the entire organization is on the same page. It's huge.
Sean, for fintechs who might be struggling with embedding compliance into product development and into the broader corporate culture, what kind of advice would you give them, and like where should they start? Where should they really start peeling back the onion and figure out how to do this?
Your long-term goals probably play a lot into that. So what is it that you're trying to build? What problem are you trying to solve? What banks are going to facilitate what you're trying to do? So your bank is going to lead a lot of your discussions and your risk tolerance. So if you've got a bank that's super conservative, their conservativeness is going to spill over into your world, whether you like it or not. So if your desire is to grow and to take more risks, even with a conservative bank, having the right people in seat within your company, whether it's your compliance officer, whether it's having a great sales team that can help make the pitch for a new product or service to your bank, that really are like, at least have their arms or a deep knowledge at some capacity of what it is that will indirectly or directly implicate from a regulatory perspective, whether it's the alphabet soup of consumer regulations, or it's AML BSA, whether it's fraud monitoring, fraud controls. Those types of people can help spread that type of information throughout your organization, which is fantastic. And then help your conservative bank to understand, hey, we've got this trust thing going now. We understand that you understand, so let's work together on this. Kind of going back to the internal collaboration, right? But again, it's really going to depend on your bank and what you want to offer in terms of a product or service. Because like today, if you want to go and you're saying, I want to get into crypto, there's not going to be so many banks that are lined up to do that right now, because that requires more oversight. And there's still the scary shadows of the unknown. But if you're looking to take those types of risks, then you're going to really have to focus on who you've got internally to kind of help sell that, not only to your banks and vice versa, but also to kind of spread that culture of compliance within your organization.
Yeah.
Ron, I want to double down on what Shauna's saying, because she's spot on. I mean, again, going back to the role of a fintech is to make commerce easier. So for fintechs to really they've got merchants on one side and then they've got a lot of the FIs on the other side. And so for them to understand and co-develop a new product solution with the merchants so that they could grow in revenue, they need to be able to oftentimes go back to their banking partners and get agreement to be able to enable these transactions to go through. And so really having someone that is really clear and understands what can and can't be done when it comes to money movement and so forth is really important, because to Shauna's point, a lot of the compliance teams within the banks they're not thinking from the merchant new product solution hat. They're just looking at how do we safeguard the funds? How do we ensure there's no AML? How is everything KYC'd? But the fintech might be launching a new solution, and so they need to be able to demonstrate how that product solution is actually following the blueprint that is compliance that the banks have to adhere to. So it's, having a compliance person, again, I go back to my initial point, also wear a product hat is integral to these fintechs growing, because ultimately what they want to do is they want to help their merchants to grow in revenue. And so they have to co-develop, and so they have to know compliance. I think this is like a critical thing that fintechs need to continue to invest in, is their compliance people.
Yeah, I 100% agree with you, because I can't even tell you how many times that we've come across products that were built prior to my time, years before my group. And we're getting to places like, oh, well, this certain thing is missing. We're like, well, wasn't this considered when you were building the product? And well, no, we were just following the checklist of things that we needed to do to make this XYZ product. So those considerations, even just straight out of the gate, make a huge difference in not only making sure that what you're offering is going to be compliant, but making sure that it's going to be scalable in the long term, and you didn't just waste X many hours of your work.
And also, when I was at Google, when we built out new product solutions, compliance and legal were right there with us with the product and engineering teams. We discussed, and you're one cohort, right? In essence, or one squad. And this is just how new products get developed, with compliance and legal at its core. Otherwise, you don't want to get to the 11th hour, you build something and then you have to scratch it.
Yep. Like, oh, I didn't realize that I had to account for interest. Oh, how did that happen?
You've worked with a bunch of different fintechs across the board. What do you see working, not working in terms of embedding compliance into the product development and the broader organizations?
Yeah, it's interesting. First, I would agree with the premise of, at the end of the day, your risk posture is going to be defined in partnership with your bank, and your bank is the one whose charter is getting extended. That is period, full stop, correct. I think we have a slightly different challenge in that we are a core, and we have been an FFIEC regulated core since 2015, right? And so the expectations that the FFIEC, whichever governing body is lead at the time, has of Helix as a core are substantial, right? And so it was actually important that from day one we had a compliance culture internally. And if you've ever met Scott McCormick, who runs our operations and was CEO back in the Smarty Pig days, he will tell you, I can't do a Scott McCormick impression, but he'll tell you the first word of banking as a service is bank, right? And so from day one, we had stood up a deposit operations team internally, right? Because things like reconciliation, money movement, et cetera, those are zero errors, right? At the end of the day, it must balance. And so from day one, we had that deposit operations team. We scaled it. We help our banks run efficiently. And I'll tell you, between 2017 and 2021, when it was, like heyday, folks were out there trying to go pull as many clients as possible. Some banks would ask us the question of like, are we doing too much? Like, is this too much to go and bring these folks live? And Scott, whose past life was at FNBO for 15 years doing white label prepaid, was like, no, we are not. Like, maybe people haven't realized what the expectations are yet, but we have to hold that line. Now, in terms of embedding compliance in product development, one of the things that we had to get better at, like deposit operations has always been a piece of that puzzle, but the thing that we had screwed up in the past is we would get some initial guidance from deposit operations, then build the product, and then hand them the dog food, right? And then it's like, oh, well, then there's all these issues with it. We had to go back, and you would go through cycles. Today I would say deposit operations is through the entire product development process in such a way where there is no rework, right? Like it across the entire process that you've thought through every underlying component because we've created a framework for it internally. And to Shauna's point, we've gone and hired folks that understand what the level of requirements are. They come from white label prepaid. They come from places like Bancorp. They come from other banks, et cetera. Or they come from fintechs that built on this type of system. Then there is, how does the fintech embed compliance into their application? And the truth is, it is different on day one versus on day 365. On day one, uh, in most cases, unless you get lucky, the fintech doesn't speak bank and the bank doesn't speak fintech, right? And so our job is to sit in the middle and provide that compliance guidance, right? And to say, hey, here's how your money flows are going to work. Like, here's the reserve that you're going to have to maintain. Here's how your account structuring is going to work. Here's the specific requirements for your product development so that you don't screw it up. Because when you ultimately go live, if you mess that up, you just lost the next 6 months. And so in the beginning, we play that role. I'm sure, Sean, that you guys experienced that as well. Once people start to scale, though, they need compliance people. And I answered this question in the chat, but the truth is, if we have customers who have 10 million customers, right, that are sitting on this. When you have 10 million, you are running a de facto bank, right? Like you may not say it, but you have to be on top of your fraud. You have to be on top of your AML. You have to be on top of your KYC, et cetera. And the nice thing is what we have noticed is for folks that scale, it tends to happen organically through constant conversations between us, them, and the bank, right? Because what you, the bank has a set of responsibilities, right? That they are staffing and really like some banks used to think of BaaS as like an easy button, and now they're realizing, no, I got to just staff the back office substantially more than I staff marketing, et cetera. But banks have their set of responsibilities, among which is making sure that they have a consistent set of controls across their bank, et cetera. But as a fintech, if you're trying to differentiate, you are going to be doing something different, right? And then the question is, what are the controls around the thing that you're doing different? What are the controls around how it connects into the rest of your ecosystem, which is also your differentiator? And so we stay we almost act as a proxy team in the beginning, and we migrate to being a consultant or translator through the underlying process. But the nice thing in being the core is our customers can always rely on the fact that we are going to get way more flack as a technology player than they are going to get because we have to stand up to the tier zero within FFIC of being an actual core at these banks. So it's an interesting balance.
All right, panel. I've got one last topic I want to bring up. I think it should take us all the way to when we kind of need to take a break, because this is going to be, I think, a difficult question and one I want you guys to think about a bit. And it's the topic of AI, broadly speaking. And about a year ago or so, I went onto LinkedIn and I posted something saying that I vow to never use the term AI ever again, because it's an umbrella term that refers to so many different types of technologies: conversational AI, um, uh, machine learning, robotic process automation, although some folks have argued with me that RPA isn't AI. Okay, whatever. And now we've got generative AI. And now, of course, you can't read any posts on LinkedIn without the agentic AI. So here, Carol, I'm going to start with you. And I want you to look at the impact of AI from two different perspectives. First, how is AI going to make compliance and risk management easier slash better? And then how is it going to make compliance life more difficult because of all the other things that everybody else in the organization is going to do with AI? So start on either, whatever side of the coin you're more comfortable with, but would love to get your take on both sides, how AI helps improve compliance and risk management and how it's going to make it more difficult.
Okay, so I'm going to answer that starting with a use case of the application of that. I believe that checkout will be gone in the next few years, right? Checkout as we know it today is someone's not going to go to a website anymore, put in their auto-populate their payment credentials and then to buy their, buy whatever they're doing online. And it will be more voice activated. You'll have agents paying for yourselves or biometric based. And so with that, a lot of AI is going to be running all that. And so how AI will actually make it easier is by being able to ingest and leverage a lot of data points. So when I go to speak and say, okay, Google, go buy my whatever, or go pay my electricity bill for me. It needs to be able to, store a lot of that data, the voice, the payment credentials, the merchant, the MCC code, the transaction limits, and all of that needs to be able to happen in real time for it to make that determination as to whether I'm really that user. Am I allowed to do this transaction at this merchant on this platform with this form of payment? And it's going to be able to detect also any anomalies in my transaction history that might dictate that this could be a fraudulent transaction because maybe it's an unseen, user ask that I'm providing it. And I think without AI, one, merchant can't create these types of, ease of checkout, but you also can't have as much access to real-time information from multiple data streams. So that's why I think it's going to make it easier. How it's going to be a hindrance is, again, there's going to require a lot of interoperability across systems for this to be a true statement, right? That you're going to have an agent to be able to check out for you. And so I do think a lot of merchants, financial institutions are going to stumble with this because a lot of them, and I've been in these banks and so forth, is that they don't even have a golden client record, meaning the client exists across a slew of different platforms. So they might not even know who Carol is, right? Holistically, they know that Carol purchased this product and this product and this product, but they don't have me in real time, right? They don't see everything that I do. And so I think before AI could really enable a lot of these great transactions, a lot of the core does need to be updated such that certain entities could be able to know the whole transaction history of certain consumers. And some are going to be better at that than others. I think any company that was built within the last 25 years is essentially built this way by customer as opposed to by product. But banks that are more than 25 years old are built by product and then the customers around that. So I think they are going to struggle if they don't centralize when it comes to enabling AI for compliance.
Great. Shawnette, same question. Questions.
Questions. A lot of the same answer. I think as a compliance person, when you hear the word AI, initially you're like, OMG, what is the bank going to think when we like run this past them? Because it's kind of the knee-jerk reaction if it's something new and shiny, right? Lithic, we're very excited about this. We're like pondering like, oh, how many ways can we incorporate AI into what we do every day? And then going through the fun exercise, we call it fun and compliance, of identifying all the risks and then how we're going to mitigate all those risks. And identifying the risks of something this new is still the big challenge, right? What could possibly go wrong? And just kind of leaning into all the things that Carol just said. It's a lot of unknowns and chasing the moving target, as David says in the chat. But I can tell you, just kind of like on a more positive note, outside of like agentic AI, which we're looking into, which is very, very interesting. We're slowly leaning into this and slowly trying to incorporate some of this into just our general compliance work to get our banks a little more comfortable, because letting go of that initial control of having a human person doing every bit of a single process is kind of an arduous task when you're used to having your physical hands on everything that you move every single day. We just rolled out a new complaints management system that had one person reviewing complaint logs from all of our different clients every month, hours and hours of work going in there, even with normalized data through logs. She was spending, I don't even know, 10 hours a month trying to go through these individual consumer complaints, just escalations, things of that nature, to determine root cause, track who were the problem makers, who needed training, who needed coaching, document all that feedback. And the AI capability that was baked into that has probably saved us 20 some hours of work and maybe an additional person we would have had to hire to scale with what we needed to do to actually check the boxes for the bank to say we had complete oversight over our consumer complaints. So it's been huge. I think there's a lot of opportunities. It is kind of scary, for the banks because of all the unknowns, but it's exciting too, all at the same time.
And McKinsey says that 80% of firms can't measure the productivity impacts of their Gen AI. Not buying into that, McKinsey. I don't think we have any McKinsey folks here. They can defend them if they want. Ahan, to you, AI impact. How can it make it easier for fraud, risk, and compliance? How's it going to make it more difficult?
Okay, I'll give you three on easier. One, data cleanliness. Uh, in order for AI to be useful, it must be able to read the data and do something with it. And most banks, honestly, a lot of fintechs data is a mess. It is not tagged well. There isn't good metadata. We try and have really tight hygiene about it. But the desire for AI is forcing people to clean up their house. And that is a really good thing for risk and compliance because it makes it easier to understand what the hell is happening inside of the financial institution. So that's piece one. Piece two is, and it's actually an extension to what Shawnette was talking about a second ago. Unpack for a second the deposit operations risk and compliance functions within a bank. What do they do? Like, what do they spend their day doing, right? let's take a reconciliation analyst. A reconciliation analyst is pulling a set of information, pulling another set of information, ensuring that these items balance, identifying exceptions, tracing those exceptions. But it is a relatively straightforward list of things they need to do. You just have to know how to do it, right? And at the end, you need to be able to validate that what you did is accurate and correct and that you balance at the end of the day. Well, it turns out that like 60 to 80% of that work does not need to be done by a human being, right? Look at a back office employee who is taking phone calls and entering notes for customers or making specific adjustments. Today, the back office of a bank does all of that work. Tomorrow, there's no reason why you couldn't have those employees one role at a time, right? You have to be really systematic around how you go and execute this, but you couldn't have those employees spend 30% of their time reviewing the output and making adjustments, because you still want the human at the end. You're still accountable, right, for what comes out of your bank, but reviewing the outputs, but 70% of the work being by and large automated, right? That is the world that not only we see happening, like that is the world that is actively happening, right? And so I think for risk and compliance experts, the great thing is that you can have these team members without having incremental team members. And what that does is unlock the potential of the people that are already on your team, right? Because suddenly you can do 5 times as much, right? With one person. And as someone who runs an organization, like the challenge sometimes when you have an IC become a manager is like maybe that IC is not very good at being a manager of people, but they really know how to do this job well. Well, the good thing is if they're supervising agents, they don't need to. There's no performance review for an agent, right? It is just did the output match the output that I want, and so you're able to scale their functionality and their ability to execute at an unbelievable level. The third piece is that things get built faster. Right, I'll give you an example. We're building something that I can't tell you about. But long story short, we're building. I'll tell you more about it later on. We're building an application with AI on top of Helix. Let's leave it there. Traditionally, the way that we would go about doing that is we would sit down and we would hard code the design for every single one of these underlying components. But because we've spent 4 years cleaning up our data, cleaning up our SDK, cleaning up our nomenclature, etc., what we were able to do is basically take 4 tools and say, okay, we've designed out what the UI is supposed to look like. Spit me out HTML, CSS version of this. Okay, now look at our SDK and look at our Tecton kit, basically, and create me a stylized version of this, and then turn that into production level code, hand that to one of my best engineers, have them go and review it. Suddenly, what would have taken 4 sprints took like 2 days, right, to get that into production. Now, that is not applicable for everything, right? Especially for things that touch the core. And today, the state of AI is still such that you need a person to review it at the very end. Our CTO jokes that he's not going to cross the street in front of a Waymo because he can't look the person in the eyes, but that's the current state, but it doesn't mean that there isn't a ton of value. Now, on the flip side, the single biggest risk, the single biggest risk from a risk and compliance perspective for AI is that you don't know what it's going to do. And you're not telling it what to do. You are teaching it what to do, which means that sometimes it will do something that you did not expect it to do. And that is part of why you need the human intervention at the end. A term that nobody is currently using, but I guarantee you in 12 months is going to be commonplace across organizations is AI observability. How do you know why it did what it did so that you can understand how to change it? Like we're already seeing AI observability platforms pop up that are backend agnostic. You can pump it into Cloud or Claude or GPT or Gemini. It doesn't really matter. But the goal is what the regulating entity wants to know is what did you do? Why did you do it? If you made a mistake, how did you change? And yeah, for now, a human being in that process and basically personally double key validating every single one of those is fine. But that's not where the world's going to go. The world's going to go to a place where those things are going to be expected to do more and more and more of those operational tasks. And so solving for AI observability is the single most important thing that a legal compliance and risk team can do so that they don't go build a bunch of infrastructure that they then have to unravel because it's a black box, right? And so I think that's the single biggest risk. I think the second big risk, and for those that are risk people on the call, which I'm guessing is most of us, we think of risk as surface area. What is your surface area of attack? There's cybersecurity risk. There is account takeover risk. There is regulatory risk, so on and so forth. AI increases the surface area of risk substantially, incredibly quickly, right? And so if you are not, as an organization, very tight about how you build AI features and you're not doing it hand in hand with the regulation, you're not implementing observability, that can get away from you really, really quickly. And at the end of the day, just like Bass, you're still on the hook. It doesn't matter what tools you implemented, right? So I would say those are the two biggest risks.
Awesome. Panel, thank you very much for your thoughts and ideas and perspectives. I learned a ton just listening to you guys. Thank you. Ed, I'm going to turn it back to you to kind of take us to the next part of all of this.
Thanks, Ron. Really appreciate that. Masterful job. I loved the active chat and the answers back and forth there. So I want to thank Shawnette, Carol, Ahan, and Ron, you again for a great conversation. There was a ton of great content as well. So just know we're going to be making sure this video gets posted up on the NYPAY YouTube channel in the next week or two for our continued review and use. And I encourage everybody to do that, of course.